Good morning, everybody. Good morning, Katalin. How are you doing today?
I'm doing okay. I do want to apologize. As a consequence of a dental appointment, my face doesn't move entirely. So very sorry for that, but we soldier on.
Well, the past few weeks have definitely been full of events in the crypto industry, and hence, we thought it's important to provide our audience with a timely update. So thanks again for joining, Katalin. We appreciate it. As always, everything we say today should not be taken as investment advice. Looking back at December, the crypto market wrapped up 2023 on a high note, driven on the one hand by positive market sentiment and on the other by the anticipation surrounding the SEC potential approval of spot Bitcoin ETF in the US. Going into 2024, the anticipation didn't last long, as the SEC gave the green light to 11 spot Bitcoin ETF on the 10th of January. Additionally, looking back at the recent trends, we have seen stablecoins gaining steam, Bitcoin ordinals sparking debate, and also a growing inclination towards real-world asset tokenization. Since the approval of Bitcoin ETF, it seems like the market attention has now shifted towards the Ethereum ETF, but we'll discuss that in a minute. So, Katalin, I'm turning to you now. We have seen Bitcoin simply doubling in anticipation of those spot Bitcoin ETF approval. Why do you think those are so significant for the industry?
Yeah, great question to start with. And the main significance, of course, is the likely inflows that these ETFs are expected to catalyze into the crypto market over time. This is still a small asset class, and the asset class going mainstream is, of course, very bullish. These new ETFs, of course, provide an easier investment avenue for the general public. They provide a regulated, familiar option for investors to get exposure without the complexities of direct crypto investments. And of course, the inclusion of traditional money managers bodes very well for Bitcoin's fundamentals and long-term growth. The big story with the ETFs was never the ETFs themselves. Futures ETFs already existed on Bitcoin. ETFs existed in other markets, such as Canada. The big story was the issuers that filed, basically BlackRock, Fidelity, and so on. BlackRock being the world's largest asset manager, and that basically was taken and is a massive signal of the asset class going mainstream. It also credentializes their involvement, credentializes the asset class, and as a result, the market has expected and continues to expect very substantial inflows over time.
Thank you. I think we understand this was a significant event. Can you maybe take us through, what happened when they were approved, but also take us through the market reaction after that?
Yeah, so of course, as you already mentioned, the price of Bitcoin actually doubled between the first announcement of BlackRock filing and the launch. And as you also highlighted, ETF-related news were basically the number one driver of the crypto market last year. I think we can say that there were other drivers, but I think it was the most significant one, at least to the upside. But initially, what happened? Initially, the price rallied to 49,000, and then volatility set in, and eventually Bitcoin sold off about 20%. Now, what happened already before the launch? There were two camps. People saying after the launch, it's going to be straight up. We're going to see a ton of inflows, and the price will not stop until some new highs. And other people saying it will be a sell the news event. And what happened initially is there was a lot of confusion. Partly because the data on inflows came with a lag, in some cases 2-3 days lag, so it wasn't clear actually what we were seeing. There was confusion about the create redeem mechanisms. There were debates about whether this will now reduce liquidity in spot Bitcoin or increase it, with the former camp saying that the ETFs will cannibalize spot Bitcoin trading, and the latter camp saying they will actually mostly cannibalize futures trading, and unlike futures, the Bitcoin ETFs do have to settle in the spot, the net flows, so that it will actually be better for traded volumes with inflows. There were concerns about the cash create feature. Some people saying this means it will not be backed by real Bitcoin, which of course cannot be. These are highly regulated. The Bitcoin has to be held by custodians, and these have to be audited. The SEC fake news added to the confusion. Basically, the fake tweet a day prior saying that the ETFs have been approved, and then the SEC saying no, nothing's been approved. But also not just the tweet, but there was a post about the approval on the SEC website which appeared and then disappeared. So I think this didn't help. I think it put people on guard, sort of thinking what is going on really. And then I do have to mention the Grayscale ETF, right? Which was the Grayscale Bitcoin Trust, a closed-end fund where people could redeem for Bitcoin, and therefore it traded initially for a while at massive premiums, but more recently, since the bear market, at huge discounts to the Bitcoin price. And so now that it was converted into an ETF, they were one of the approved ETFs. Of course, this discount disappeared. It closed the gap. And then there was the question, how many people are now going to sell and just basically get out of this position and be relieved that they were able to get out without having to sell at a huge markdown. And there were a lot of flows, but it wasn't clear. And there was, of course, a lot of Grayscale ETF selling, but it wasn't clear what the net flows were out of this, because also the Grayscale ETF has the highest fees, so there was definitely a rotation. Some of it people sold it, not because they wanted to get out of Bitcoin, but because they wanted to get into a cheaper ETF. The fee wars with issuers still cutting fees even after the launch, waiving fees for certain periods, some of them zero fees for a period. So there was a lot of rotation, and it wasn't clear how much is rotation, how much is net flows. And on top of that, some of the traditional institutions were really treading cautiously. To start with, Vanguard, UBS, Citi, news came out that they either blocked or all their clients or some of their clients, they only allowed some of their clients to buy these new ETFs. So all of this just created a lot of volatility and confusion. And then there were two large sellers unrelated to the whole ETF story and only rated kind of to anything. But that basically tipped the balance. And the two sellers were the FTX bankruptcy estate that held a lot of Grayscale Bitcoin Trust. And now that the discount closed, they liquidated $1 billion position. And the other was a whale, a $5 billion whale who bought, not at the top of the last bull market, but kind of near the top of the last bull market. Now this position was slightly in profit when the price went to 49,000, and this whale started selling. Now, again, there are two theories about this. One is that it was a position that was manipulating the market in 2021 to the upside to give it a final flurry at create a froth at the top of the bull market, and now doing the opposite, so the price doesn't run away right at the beginning of the year, and maybe people have time to buy into the new products and consider it. There's this opinion out there. It can also be that it was just a genuine large buyer who bought quite near the top and then bravely held through the bear market and held tight and didn't panic, and now that he's in profit to a small extent, he's basically taking some profit. So, but basically these two large sellers tipped the balance, and then this is a sell the news event narrative took hold, and then that's the way the market went. Now, having said that about the market's reaction and the 20% correction, I do want to emphasize the good news. One is the records that this ETF has broken, or these ETFs. The traded volumes were extraordinarily high. They were a multiple of all of the 2023 ETF launches put together. The day one volume was 3 times the volume of the gold ETF's debut, which was, of course, the gold ETF was, the previous like highly anticipated and so on ETF and very successful, holding the record until now. Now it's the Bitcoin ETFs. Also, the net flows are definitely positive. New capital has definitely moved into Bitcoin. It appears that it's around 1 billion net inflow that has materialized up to this point. And with that, now the assets held in the new Bitcoin ETFs, they have surpassed the silver ETFs. It's now the second largest commodity ETF after gold.
Thank you, Katalin. Exciting. Now, looking ahead, what do you think is the outlook from now on for, I would say, those Bitcoin ETF, but also Bitcoin itself?
Yeah, the biggest question is are the expected inflows priced in now or not? And of course, we will only find out over time. But expectations remain for very high inflows over time. Really, the marketing campaigns that these ETFs issuers are running are unprecedented for ETFs. The cautiousness, I think, of some traditional institutions is likely to abate over time and kind of gradually ramp up. The forecasts for the inflows are very, very high. Just to give you a range, Bernstein forecasts $10 billion. Standard Charter forecasts between $50 and $100 billion. We actually will only be able to assess this over sort of a 6 to 9 to 12 months horizon. This will not happen, of course, instantly. It was never going to happen instantly. Now, this is a product that these large managers offer. They're heavily marketing it and so on and so forth. So I would generally say that the outlook is quite positive. Now, on the other side, there is some supply overhang. And there are two questions here. One is the grayscale selling. Is there more to come? The indication is that this selling has really slowed down. So maybe that's kind of nearing the end. And the other one is Mt. Gox, which I don't know if anyone remembers. It's a bankruptcy that happened 10 years ago. And the estate holds a huge number of Bitcoins. It's like 150,000 Bitcoins. And it has taken this long to process it, but now it appears that the creditors will be paid out. So that's also some supply overhang. Now, that is, of course, an issue. I wouldn't be on a medium-term outlook. I wouldn't be too concerned about this for a couple of reasons. One is that these supply overhang situations are temporary. Once they're over, they're over. New investors embracing the asset class, that's forever. They may buy or sell in future, but basically crypto going mainstream and being put on the map, that sort of a demand is lasting. These kind of supply situations are just temporary, kind of unique situations. So on the medium term, I wouldn't worry about them too much. And also we have seen, for example, last year with Solana, when the price of a token has really strong drivers and it's moving up. Solana token actually went 10x last year. It was not something like that, something crazy, multiple x. That happened in the face of a huge amount of Solana tokens being sold by the FTX bankruptcy estate, which everybody thought was going to really hurt the price of Solana. And the bull run in Solana just blazed through it, and it didn't even pause. But beyond the ETFs, Bitcoin also has, of course, other positive drivers. There's the reinvigorated innovation on the network, the growing transaction count, which for the first time last year started to really strongly grow. So these are exciting developments that are ongoing. And of course, the upcoming halving, which at this point is no longer really a supply-demand issue because the amounts are involved are so small. But the halving puts the spotlight on Bitcoin's core value proposition, its immutable scarcity. I think that's important.
Thank you. And obviously we have talked quite a bit about Bitcoin so far. In your role, you are very close to the market. You're talking to fund managers on a regular basis as well. I think I've hinted a little bit towards that question in the introduction already, but is the market, in your view, still completely focused on Bitcoin, or is the attention now shifting to other tokens and projects?
Yeah, very, very good point, actually. First of all, I do want to say that the outlook for Bitcoin is good, but I think it is expected that moving into the next phase of the bull cycle, the attention will shift to other assets, and this has already started to some extent. Now, this is nothing negative about Bitcoin. When we say Bitcoin might underperform going forward, that's not expecting negative performance from Bitcoin, quite the contrary. And actually, it will have a lot of eyes on it. There's the safe haven narrative that is again very strong since the US banking crisis last year. Corporate treasury is buying Bitcoin again. And against the macro backdrop, I think this is an important narrative that's supporting Bitcoin. The ETF inflows will be very much in focus. All these marketing campaigns from the ETFs issuers out there will keep the spotlight on Bitcoin for sure. And all of the revival of innovation, transaction count growth, halving, all of that. So not expecting to the market to forget about Bitcoin or for the performance to be anything, but probably pretty positive. But the attention is now shifting to other assets, and Ethereum is of course the second largest crypto asset, but it's also particularly interesting because it has been such a massive underperformer for a year and a half. Some of it's slightly deserved because of certain factors, but a lot of it I think is quite undeserved and leaving the token quite cheap relative to other tokens with a lot of catching up to do. And there's some major catalysts for Ethereum on the horizon. The one you already mentioned, the attention now shifting to the Ethereum spot ETFs, which are also expected to be approved this year, bringing obviously important substantial flows, maybe even more significant for Ethereum relative to the token size if it's really mainstreamed and pushed by BlackRock and Fidelity and so on. There's also an important upgrade upcoming on the Ethereum network, which is focusing on scalability, and scalability being a very critical issue for the crypto industry in general. I think this upgrade, and it's likely Ethereum has always been very cautious, and all their upgrades have been performed perfectly. So if everything goes well with that upgrade, that will be an important catalyst. And there is one more quite significant catalyst for Ethereum, which is the launch of restaking Ether, which holders can earn additional yield, and Ethereum lends its security to other blockchains through this restaking feature. There's this project called Eigenlayer that are doing it, and they started last year, but with a limited capacity. That capacity was filled very, very quickly. So the demand for it is clearly very strong. Now, some of the demand is because of in anticipation of airdrops to people who support the platform early on. But it appears that that's going to be probably another strong driver for Ethereum.
Thank you. And then beyond Ethereum, what else is happening in the crypto market? Would you agree that we are in the early innings of a bull cycle?
Well, that is our opinion. That is our opinion, and we will only know for sure in hindsight. But there are some strong signs, and one indication is that the buying has been overwhelmingly institutional. We see many signs of this. That, for example, the CME being the platform of institutions versus where the retail tends to trade, suddenly took a ton of market share from other platforms as basically the sign that institutions were moving in. We don't see the retail froth at all anywhere near. That usually comes at the top of bull cycles or in the latter phase of builds during the second phase of bull cycles. We also see that long-term holdings of Bitcoins are close to all-time highs. So basically, long-term investors in Bitcoin are just holding steady. They're not they've not been selling, and they're not ready to do so. Of course, institutions keep building and making very positive comments, even Larry. And also, if we fit, of course, there's no guarantee that this cycle will unfold the same way all the previous cycles have unfolded, but we have seen a few cycles in the crypto market now, and the pattern has been very consistent, and the pattern that we have seen so far fits past cycles, and it would indicate that we are on the verge of completing the first phase of a bull cycle where Bitcoin leads and dominates, and moving into a second phase where the attention shifts to alternative blockchain designs, use cases, and we're already seeing some of this. What can be interesting here, of course, we could talk about what's going on in the rest of the market for a very long time, but I would just highlight one or two quite interesting things. One is the intersection of AI and crypto that will create a lot of opportunities for sure, and all sorts of different kinds of opportunities. There is as the Web3 infrastructure subsector has a niche that is now referred to as DePIN. I think we're going to start using this acronym, is Decentralized Physical Infrastructure Networks. This has been a very strong performer already, with several projects in this niche, some of them linked to AI, some of them not linked to AI at all, but showing very strong user growth and showing some nice price increases as well for the tokens.
Thank you for those details and elaboration, Katalin. I think those innovation definitely sounds very, very promising. It's fair to say, to conclude, that we have witnessed a pivotal moment for the crypto industry in January 2024. Should you want to know more, I'd like to point you towards the research section of the Sygnum website, and more specifically to our house view, which is delving on those topics, but obviously also many more. Thank you all for tuning in, and have a great day. Bye.